Hey everyone, happy Thursday, December 11th. It's a little bit before 8 a.m. on the West Coast, and it's time for another market update. Well, the big market news this week was yesterday's Fed meeting. But before we get into that, let's go back to last Friday because it's big September PCE inflation data. And remember, this is the Fed's favorite form of inflation. So this really was the last chance for something weird to surprise the Fed and maybe change what we thought they were going to do, which was cut rates. So, again, this is September, so this is old data because of the shutdown, and luckily there was no big surprises. It's not necessarily overwhelmingly positive news on the inflation front, but it was kind of as expected. The headline number, all encompassing, came in at 2.8. As you can see, it's been kind of, we got down a little bit lower, getting closer to 2, and then since then it's been steadily climbing. It was up 0.3% month over month, and in the month of September, again, this is dated. And then the core, which is the first thing they look at because it takes out food and energy costs, and they think that their policy have more of effect on the core than they have on things like food and energy that are controlled by global stuff and famines and wars and all that kind of stuff. So they came in at 2.8, which is a little lower than expected, which was good to see. But again, it's been pretty even. A little bit above 3, came down a little bit, and then came back up, and now we're slightly coming down. As you can see, the annualized run rates for the 369 or 36 and 12 are still over 2.5, 2.6 for the 3 months. That's good that it's coming down as we get into the more short term. So hopefully, as we move forward, it keeps coming down and gets closer to that Fed goal of 2%. Because remember, the lower this inflation gets, the more likely they are to cut. The higher inflation is, the more they can use this as an excuse and say, hey, inflation's too high, we can't cut because we don't want to get inflation to get out of control, which is a valid concern. So that was that. Very good to see that we weren't surprised. So going into yesterday, the markets were very, very confident. I think 90% chance that the Fed would cut their rates. But the more concern is about what they do afterwards. And they did cut their rate. So they cut their rates by a quarter point, as was expected. And again, this is not mortgage rate. This is the Fed funds rate, which controls overnight banking, credit card rates, HELOCs, things like that. Mortgage rates are somewhat attached to this, but they're separated. So just because the Fed cuts a rate doesn't mean mortgage rates came down by 25 by a quarter of a point. As we've seen the last few times they've cut, September and October, rates have gone up after they've cut their rate by a quarter point. So yesterday, again, they cut by a quarter of a point. And really what the most important thing, when we know they're going to cut, is they release their summary of economic projections, which kind of shows what they think is going to happen going forward. And they also have, Chairman Powell has his press conference and things like that. So at the press conference, Chairman Powell made a comment right here. We're well positioned to wait and see how the economy evolves from here. So basically, they're signaling they're most likely going to pause, and the markets right now are taking that as a pause. The January meeting, about a quarter or 25% chance they'll cut, and about 75% chance right now they won't do anything. They'll just stay where they're at. But overall, the tone wasn't too hawkish. They did, basically, it made the markets feel like, hey, there is a chance they'll keep cutting going forward. And the other thing to keep in mind here is Fed Chair Powell, his term expires in May, so it'll be 3 meetings going forward with him as the chair. When the new chair is selected, it most likely will be someone that is more in favor of cutting rates quicker, as the president wants. That will probably open the floodgates a little bit for quicker cuts and stuff like that. So that's something on the horizon, but that's not until May. So he will lead 3 more meetings. I think January, February, and March, or January. So basically 3 meetings before May. And then the other thing that I want to take a look at real quick coming out of this, because it's interesting, is where mortgage rates have gone each time they've cut those 3 cuts we just saw, September, October, and December. So this is going back to September 1st. We were above, going close, about 6.6. This dive right here, that's not the cut in September. That's before the cut. This climb is when the cut happened. And Fed Chair Powell came out and made us think there wasn't going to be a cut again. So then things moved around. Going into the meeting in October, things dove again. And then they jumped again when Fed Chair Powell talked and made the markets feel like it was going to be, maybe they wouldn't cut at this December meeting. So then things kind of went around, and going into this, you can see we're dropping now. But again, not too much, the 3 cuts, but we've only come down maybe a quarter of a point in mortgage rates, 0.3. But a lot of these gains we've given away based on the narrative and what the Feds had to say afterwards. So that's why, maybe the new Fed chair would be such a positive besides, policy. Maybe there's some things they say that's coming out of the Fed would the markets would like better and that would help mortgage rates. So that's where we ended up. Obviously, we'd like to be a little bit lower, but all good news here. Inflation wasn't a bad surprise. Fed did announce, as they were expected, that they would cut their rates, and it wasn't too much of a hawkish tone at the press conference afterwards. Next thing, real quick, initial jobless claims came at 236,000. Estimate was 220,000. Still pretty low. And again, this is coming off a holiday week, so this might, just like last week was a holiday week and it was lower than than normal because people didn't file. This week, maybe more people filed because they didn't file last week. So we'll have to see what it is going forward. Where do we stand? They haven't updated yet, but basically right where we were last week, 6.25. It climbed a little bit. Right now, it hasn't updated at 6.3, but more than likely, it's been a good day so far coming off that meeting yesterday. So it'll probably come down about 6.25% would be the average conventional rate for mortgage lenders across the country for good borrowers, according to that Mortgage News Daily daily survey. Important dates. So coming up, real here in the near future, over the next week or two, we get the BLS jobs report. That's a big one coming up next week. That's the biggest jobs report. That will have a lot to do with what the Fed does moving forward. And then the next PC, we're going to get another PC pretty quick since this was September's data. We'll get November here in about 8 days. So next Friday. And the Fed doesn't meet again until January 28th. So there's going to be a lot of data that comes out before then, a lot of narratives, a lot of Fed speakers talking, a lot of world stuff going on. Who knows what's going to happen? The world's a crazy place. So let's hope it all comes in our favor and kind of keeps the Fed on their trajectory to cut rates. Let's hope that the markets come around and think, hey, yeah, they will cut at this January meeting because obviously the quicker the Fed cuts rates, the more likely it is mortgage rates will come down with them. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.